Hey, what is up, stock compounders? All right. So I'm doing this live stream from Sarasota, Florida, spending a week in Florida with the fam. So decided, hey, why not jump on for a Q&A midway through my trip here? So how we're going to do this, I'm going to take some questions from the community post I put up yesterday. But I really want to prioritize questions that come through in the live chat. So you guys have questions as we go along, please pop those in. Also, let me know where you guys are watching from. It's fun for me to see, where in the world are people tuning in from. So plug that in the chat. I will give each of you guys a shout out as I go along. So just to get things started here, I'm going to look at the community post I put up to dive into questions there first. So first question from Martin. What are your thoughts on Mary Rottler, the COO, Chief Operating Officer of Seritage, leaving? By the way, I just read 1 Billion Customers, Lessons from the Front Lines of Doing Business in China. I highly recommend this book to understand the mental model of doing business over there in China. It's a bit outdated, but there are lessons that are eternal business practices. Thanks, Martin. I will check out 1 Billion Customers. That sounds like something that could be useful, right, for my learning, especially since I own a few companies over there in China. I don't have any thoughts at the moment on Mary Rottler leaving Seritage Growth Properties. So Seritage is one of those companies in my portfolio that's like a decade or more long play. Okay. And so I'm really not following very closely what's happening on a month-to-month basis over at Seritage. Some of you may think, well, that's crazy, right? I'm sure a lot of you track very closely what's happening in your portfolio, have notifications on for every little event that happens. I didn't even know Mary Rottler was leaving. She's not any significant piece of my investment thesis for Seritage Growth Properties. So I am curious, what spurred her to leave Seritage Growth Properties. So, I'll probably follow up with that after this live stream just to get a little bit more color on what prompted her to leave. But it's really not any part of my investment thesis for Seritage Growth Properties. Been a lot of turnover, obviously, for all of you who have followed Seritage. There's a lot that's been shaken up over there from the management team. Next question from Patrick. Would there be any changes you would make to your portfolio heading into higher interest rates / tapering by the Fed? No. There wouldn't be any changes based on where I think interest rates are going. I mean, long term, there's not many places for interest rates to go other than up, it seems like, from my perspective. But that doesn't have any bearing on, decisions I'm making in my portfolio, right? That's a macro factor. And I just don't have any ability to estimate what's going to happen on a macro level. And so I don't try to factor it in with decisions in my portfolio because, I'd probably make more mistakes than there would be benefit to my portfolio if I were considering those things. I think the best thing, and Terry Smith talks about this as well, really the best thing for raising interest rates, inflation as well, is having a business with pricing power. And the easy way for Terry Smith to identify businesses with pricing power is businesses with high gross margins. Okay. If you have a 65% gross margin, it means you're spending 35 cents to make a dollar. Okay. The less you have to spend to make a dollar, the more pricing power the business has. So that's a great rule of thumb that I picked up on from Terry Smith. John, I'm going to do one more on the community post, then I'm going to jump over to the live stream. John asks, hi, Brad, why no love for Canadian stocks? or is it a circle of competence sort of scenario? The Canadian banks are navigating the pandemic with authority. Would love to hear your thoughts. Um, I don't have anything against Canada. I'd be perfectly comfortable buying public companies in Canada. Banks is a completely different story. So I have zero ability to understand a bank. Okay, to understand, the assets and the liabilities picture with banks. So I just stay away from banks. There are some interesting companies in Canada. I know Topicus is listed in Canada. Uh, is it listed in Canada? Yeah, it's listed in Canada. It's listed, I think, in Vancouver. Topicus is a recent spin out from Constellation Software. If I were to buy a Canadian company, that would probably be the one that I would dig into first. But I have no issues with Canada. I haven't done much work on this. My initial impression is that, um, buying in Canada is pretty safe in terms of, avoiding frauds and things like that that we see much more of in emerging markets. I think Canada is a pretty safe market to invest in overall. So no issues there. One of the big things is as a starting point, I look for companies that have been bought recently by great investors. And, the easiest way to find that is through 13F filings. And Canadian companies aren't required to be disclosed in 13F filings. So it's a little bit harder for me to see what great investors have bought in Canada recently versus what's been bought in the US. I think that's probably the main reason I haven't done nearly as much work on Canadian companies. That's for that simple reason. Okay, let's see what's happening on the live stream. So let's see. Hi, Brad. Can Fed increase interest rates? Absolutely, it can increase interest rates. If it does, will then the US be able to finance its debt? Yeah, I think this is the big question. What's going to happen? It's inevitable that the Fed will increase interest rates. It seems inevitable as well when the Fed increases interest rates, the valuations are going to come down on stocks, and it's going to put pressure on prices in the stock market. Could cause some kind of, collapse. Could cause the next market crash. Obviously, that's all speculation. But I think, we're in a precarious position that way with interest rates so low. There's pretty little margin for error there when interest rates rise. So that's a concern for me. That's obviously a macro factor here. I try to own businesses where I'm happy owning them for a decade or more. And with businesses like that, anything short term like that, short term market corrections, market crashes, it's not something I can predict, and so I don't put weight on it in terms of making decisions in the portfolio. But interesting question: will the U.S. be able to finance its debt? Obviously, we can always print more money. There must be some kind of limit to that, where if we print too much money, the rest of the world decides, okay, no more US dollar in terms of global reserve currency. And, who knows when that point is, when that tipping point is. Nobody does really. Sam Zell, the grave dancer, speculated, I think it was a year ago or something, doing an interview that he thinks within the next 10 or 15 years, the US dollar is going to lose its status as the global reserve currency. So that would be fascinating to see, everything that unfolds as a result of that. Probably be a little scary for investors in the US who, really hold US equities as the majority of their portfolio. But it may be a scenario that we have to face sooner than later. James, how's it going? It's going pretty well. It's nice to be here in Florida, in Sarasota. It is peak hurricane season, so I find myself, kind of peering over the abyss, off into the distance over the Gulf of Mexico. But it's not something I'm super concerned about at the moment. I'm enjoying the vacation. It's nice to be with the grandparents, have some help with the grandkids. We made the decision, for better or for worse, to live in California, far away from grandparent help, which, for any of you who are considering starting a family, it is invaluable to be close to extended family, to have help with the kiddos. So not a move I would necessarily recommend to anyone, but it's what we ended up with. What are you reading now? Well, let's pull up Audible real quick. Just to refresh my memory, I'm reading Power versus Force by Dawkins. That's a book that was recommended by Monish Pabrai recently. I got to tell you, the first about hour of that book, boy, it was hard for me to really buy into what Dawkins was talking about. It felt very woo-woo to me, but I'm sinking in. There's something to this book that I think I want to continue with it and maybe dig a little deeper into. So it's a fascinating book, Power versus Force by David Hawkins. Sorry, Hawkins, not Dawkins. Bradley, I'm not macro, but I do find it interesting that Yellen is saying the U.S. may default on debt soon. That is very interesting. I didn't hear her say that. She probably said it if you're saying she did, Bradley. I don't follow really what Yellen is talking about. Again, that's macro. I really like to drill into micro, what's happening at the specific business level, because that's actionable. That's stuff I can act on. I can find opportunities where the market is just getting a company wrong, right? They're mispricing a company. But in terms of macro, I don't have any ability to act on that information better than anyone else does. So, but that would be interesting if the U.S. defaulted on its debt. Greetings from Belgium. Any chance to review Huya stock, Huya? Huya, it's a Chinese company. So I'm pretty comfortable right now with my current exposure to China as a US-based investor. I've got Alibaba as one of my largest positions, and I have Prosus as well, which obviously has a lot of exposure to China through Tencent. So I'm not looking at the moment for any more Chinese companies to add to the portfolio. But with what's been happening, with all the fears around regulation in China, I'm sure there's just a ton of great investment opportunities over there. I've reached my personal threshold in terms of what exposure I'm comfortable with in China. Tom, is there any other book on special situations other than Greenblatt's book, right? So the yellow book, You Can Be a Stock Market Genius by Joel Greenblatt, which is pretty old, right? I think it was written, seems like it was written in the late 90s, maybe. I don't know any other book that I'd recommend on special situations. I'm sure there are good ones out there. How would I go about figuring that out? I would probably put a tweet out. If you guys have any kind of audience on Twitter, or maybe send me a DM on Twitter and just kind of draft a tweet for what you would put out on special situations books, and maybe I'll put it out on my Twitter. Just seeing, I follow a lot of great investors, and it's a very powerful community over there. So I'm sure there are people who have recommendations about special situations books that are more current than You Can Be a Stock Market Genius. So hit me up on Twitter. Maybe I'll put a tweet out to see if there's anything about that, because I'd be interested as well. So thanks for that question, Tom. James, I want to buy racist, but I'm from the UK. Can I do it the same way you have done it? I don't think you can buy. I don't know if Fidelity is in UK at the moment. I'm pretty sure you can't buy races through Fidelity if you're in the United Kingdom. I don't know the best way to do that. Again, James, I would recommend you reach out to Enrico on Twitter. If you just scroll through who I follow on Twitter, you probably hit Enrico fairly quickly. I don't remember what his last name is, but he seems to be doing a lot of work on that. Also, the Discord for Punch Card. I think there are a number of people in that Discord who have been talking about Races and how to buy it from different areas of the world. So check that out. Mike, Chicago, Northwest Indiana is in the house. All right, Mike. My wife is from Chicago. I actually lived in a suburb of Chicago for 4 years growing up in Killdeer, very small, close to Schaumburg. So big shout out to Mike in Chicago. And of course, my buddy Jack Duffley, who's also on Punch Card, lives in Chicago. I believe Sam Zell also lives in Chicago. So lots of great investors over there. It's a happening place to be. Nathan, what do you think about buying RYSKF on TD? So TD Ameritrade. Liquidity problem. So I don't think RYSKF really has any liquidity at all, okay? It's really interesting. So when I bought Races through Fidelity, what they said was I was buying Races that was listed in Istanbul, okay? RYSAS. But the ticker that shows up in my Fidelity account is RYSKF, okay? So it's very confusing. But my understanding is when the whole currency thing really started happening in Turkey, currency just took a dive. The OTC for Races, RYSKF, stopped trading. Okay, so the platforms pulled that OTC ticker, and I don't believe it's up again. The thing that just happened recently, where there was a 10x from the over-the-counter version of Races, I think happened. It was a very small order that was placed in the wrong currency, and it just shot up. And the reason it shot up 10x is because there's just no liquidity, or very little liquidity. So I don't think it's possible to do that. You can certainly try to buy that OTC ticker through TD Ameritrade. I don't think it's going to go through, but there's no harm in trying. The only way I've found to do it is to call the international trade desk through Fidelity, and they're able to place the order over the phone. Can't be done through their online platform. So that's what I would recommend. And you can go back to my video that I made on Races and Fidelity. The International Trade Desk 1-800 number is in the description for that video. Rajesh, sharing an observation. Pabrai has been trimming Shinnikin and Nice Holdings and diverting to Races. And as we know, he increased his position in Baba back in Q2. So yeah, it's difficult to know through Ticker Terminal, through these filings that aren't 13F filings. I'm going to pull up Ticker here to really have a clear picture of what's going on. Because often there's no supporting documentation for, if you go to Ticker and you look up Pabrai funds, you can see filing type, shareholder reports are what we're getting information about for Nice Holdings, Edelweiss Financial, Suntech, Races. And, without any supporting documentation, it's hard to know, how real these numbers are, or, why Pabrai is trimming. Obviously, we don't know why he's trimming necessarily in the 13F filings unless he's talked about it in recent Q&As. But yeah, you can see if you pull up ticker Nice Holdings, 6% reduction recently. I mean, that was back at the end of March 2021 is when that shareholder report was from. Edelweiss, the end of June, 18% reduction. Suntech, 26% reduction. So it's hard to know exactly what's happening here. Obviously, Pabrai has multiple accounts as well, right? There's Pabrai funds, there's Dando Holdings, there's Pabrai's personal account. So it's tough to really trust when there's additions or subtractions, when we don't have the details of what's happening there. So, it does say Shinnikin, he reduced 15%, and that was as of September 15th, right? So just 2 weeks ago. Hard to glean much from that, from my perspective. We got John from St. Louis. All right, John, what is up? Thanks for being here. James, love your videos. Keep up the good work. Thank you, James. It's fun. I don't know why, I haven't done more live streaming. Live streaming really suits my format because when I make videos, I just click play and then I upload, right? There's no editing. So live stream is great, right? Because, not only can I just put out the content that I'm putting out, but I get to interact with you guys in real time. So I'm glad I've started doing that. And my energy is a lot higher in the live streams because I feed off of you guys in the comments. Jonica, did you visit Turkey and what are your learnings? I did not visit Turkey. I don't know a guy in Turkey like Pabrai does. Racist was really, okay. Pabrai is very bullish on it. He's shared a bit about his investment thesis. It makes sense. So I'm going to start a position and, learn from there rather than need to have super high conviction myself before I get in. So haven't visited Turkey yet. I think it'd be fun to visit Turkey at some point. Yeah. So that's Turkey. Have you checked out Micron's quarterly earnings yet? No, I have not, but I saw that there was a video released. Sanj, no, I can't. I haven't watched it yet. So one of the two guys that I was getting info from for my last big video on Micron has just put out a new video through some podcast, Value Investors TV. I think it was VITV podcast. And I've been meaning to watch that. I haven't gotten to it yet. But no, I don't have anything to share about a recent update on Micron. Tom, how important is understanding corporate tax law in investing? I'm sure it's helpful. I know Buffett, I forget who had said this, but Buffett is probably, understands tax law the most outside of the people who are actually writing the tax law in the U.S. So for him, I think it's been important, right, for how well Berkshire has done over the years. I don't think it's essential. Again, I think it's sort of one of those bigger picture items where if you just get really into the weeds on individual businesses, that's a much better place to spend your time as a beginning investor than trying to wrap your head around the entirety of corporate tax law. But I'm sure there are advantages to knowing certain aspects of that. But again, it's not the low-hanging fruit by any means. Rasmus, how do you about the competitive nature of industries and how price-sensitive customers are? Also thoughts on business with supplier leverage and or customer leverage. I interpret this as, how do you go about understanding the competitive nature of industries and how price-sensitive customers are? Well, the easiest way to understand how price-sensitive customers are is to invest in businesses where you yourself are a customer, right? And you just have to ask yourself, how price-sensitive am I? For example, if you have an Amazon Prime membership, I have one through someone else, so I don't know how much it is anymore. Let's take Costco, for example. So Costco, I believe, charges like $50 a year for Costco membership, and you need to have a membership in order to get into Costco. If they raise that to $75 a year or even $100 a year, I wouldn't blink. Okay, I would just pay that because I'm saving so much more than that throughout the course of a year of buying products at Costco. So to me, Costco customers probably aren't all that. Now they're price sensitive at the item level, right? I mean, most customers wouldn't be Costco members if, Costco raised their prices by 50%, or it would probably take 50% in order to get people going back out the door at Costco, just because currently, I mean, it's so much cheaper than any alternative, right? If you go to the grocery store, right, and you compare prices to what you could get at Costco, it's just a lot cheaper. So there's price sensitivity at the product level. Like, that's the reason people are Costco members. But I think that membership isn't very price sensitive. So, the best way to understand that is just to be a customer. Now, the competitive nature of industries, you're not going to get that from being a customer. That just takes really understanding not only your business within the industry, but the competitors in the industry and industry dynamics. And, there's a lot of elements there to understand. And the best way to understand that is to be curious about it, right? So you have to have this innate curiosity, like, okay, I really want to understand this entire industry. If you don't have that driver, that motivation, that intrinsic curiosity, it's going to be very difficult for you to do the work that leads to that level of understanding about an entire industry or multiple industries. So most people aren't going to have that driving curiosity to get to the bottom of something like that. John, Tom Goretzka. I'm currently, okay, so John is interacting with Tom. This is great. I love when you guys, share resources with each other in the comments. The community is so much more than just me, guys, which is fantastic. I love seeing that. It's like it's its own intelligent entity, and more so as it evolves. So Tom's talking about, or John here is talking about special situations, spin-off investing simplified. Okay, could be one to check out if you're interested in special situations. Thanks for that, John. Rasmus from Copenhagen. All right, truly an international crowd here. Chingiz, greetings from Kazakhstan. Yes, that is fun. Kazakhstan, welcome. Clay, Prosus Naspers may never unlock the 10-cent discount they have. Why go Prosus for a maybe outcome when you can go 10-cent and ride all of their upside? So that's a fair question. Aswath Damodaran, prolific valuation professor at NYU, looked at this very issue recently, looked at Alibaba, Tencent, Naspers, and Prosus, and he decided to invest direct in Tencent, okay? And the reason for that is, if you go Prosus or Naspers, now you have to count on not only the management team there at Naspers and Prosus, but the management team at Tencent as well. So you have double management risk. You could even think of it as like a power of two management risk, okay? Exponential management risk. Now I look at it from the other side, whereas, you could see it as having double management risk. I see two excellent management teams, okay, where you have exponential upside from being exposed to both of those management teams. If you look at what, Naspers has been able to do, excluding Tencent, over the last couple decades, it's like an 18, 20% IRR, okay, internal rate of return. So clearly, Tencent has been a massive home run, but the rest of the portfolio has done very well outside of Tencent. So I'm perfectly comfortable hitching, my wagon to both of those horses, the Prosus management team and the Tencent management team. And sure, it's possible they'll never unlock the discount, but that's not my thesis. Okay, I see routes to unlocking that discount over time, and I'm perfectly happy betting on that. Mike came in late. Did I miss any Micron update? No, I did not share any Micron update. I don't have any Micron update for you guys at the moment. Rasmus, what do you think of financial engineering? Rasmus, what do you mean by financial engineering? I presume maybe what you mean is, say, if a management team is incentivized based on earnings per share or something like that, where they can kind of tweak the numbers in order to make it look like the fundamentals of the company are, crushing it, right? In order to capture those financial incentives for themselves. Yeah, if you guys see that, you got to run, okay? Because that's a cockroach in the kitchen, right? That sign of financial engineering. There's never only one cockroach in the kitchen. So if you see that kind of financial manipulation, those financial shenanigans, that management team does not have your interest at heart. They probably don't have a significant stake of their own wealth, their own family's wealth in that opportunity. And so there's just misaligned incentives, and you've got to just run for the hills in that case, in my opinion. Yeah, that's a very simple rule that I follow. Mo, I noticed through Ticker that Greg Alexander has a large bet on Delivery Hero, and Prosus owns almost 30% of Delivery Hero. Yep, I saw that as well. That's exciting. Greg Alexander, guys. So when I was doing my spreadsheet for great investors and their track records, I could not find anything on Greg Alexander in terms of conifer management. I really wanted to see, what are the historical returns for conifer management? Crickets. I mean, he is so far under the radar, Greg Alexander. And the reason I want to know more about him, I think it was like 2012 or 2011, Warren Buffett gave 3 names where he said, any one of these 3 investors, I would be happy to take over my family's investment portfolio after I die. Okay. Li Lu was 1. Seth Klarman was 2. Greg Alexander was 3. So the little I know about Greg Alexander, he was part of Sequoia for many, many years, many decades. And I think recently, I don't know when, it might have been 2019. I think 2019 is when conifer management starts to show up in Dataroma. Just recently, Greg Alexander has popped onto the scene with this entity, conifer management. And yeah, I'd love to know more about Greg Alexander if any of you have any information on him. But yeah, big position in Delivery Hero, which is exciting to see since I have exposure through Prosus. Otavio from Sao Paulo, Brazil. All right, representing from South America. Love it, Otavio. The Financial Review. Hey, Brad, the market cap of Amazon is about 4 times that of Alibaba. Does that seem reasonable to you? I don't know. How would I think about that being reasonable? I haven't done much work on Amazon. I don't know how global their current portfolio or their current exposure is. I was talking recently on PunchCard to Tom, who's in New Zealand, and Frank, who's in Australia. Amazon doesn't seem to have much of a footprint in those countries. And I think partly it's because the logistics, it just doesn't make sense from a logistics perspective to offer 2-day shipping in places like Australia and New Zealand, where the population density isn't there and the infrastructure potentially isn't there. It would just cost a lot more than it would bring into Amazon to be in those markets. But I don't know what kind of global footprint Amazon has as compared to Alibaba. That would be very interesting. I think that would be a big part of what would help me ascertain whether 4 times the size for Amazon makes sense relative to Alibaba. And then, of course, you have cloud, right? Where Amazon is at with cloud versus where Alibaba is at with cloud, right? There's a few years lead that Amazon has there, which is a huge potential piece of Amazon's business over time. Same with Alibaba. I think cloud, perhaps in the next 5 years or so, could exceed what they're doing in online retail. So it'll be very interesting to watch how that unfolds with Amazon and Alibaba in cloud. So the answer is I don't know. I need a little bit more research in order to decide if Amazon at 4x Alibaba is reasonable. Are you still planning to do a detailed video on Alibaba, its financials? What are key performance indicators? Yeah, I'll put out some content on Baba soon about sort of the financial details and what my KPIs are for Alibaba. Thanks for that poke, Yugal. Matthew, are you planning to invest in any micro cap or small cap stocks in your main portfolio? Not in the near future. I don't have my crosshairs on any small or micro caps at the moment. I think a few months ago, I did sort of a pitch on a small cap in the PunchCard stream. But conviction for me, a lot of that comes from, again, top of the funnel. Is a great investor putting skin in the game in this company? It makes me uncomfortable not to have that as an anchor point. It sounds like Matt Peterson is in the same position where, for Peterson funds, the top of the funnel is he's tracking, was it like 50 or 100 great investors, 13F filings, and that's sort of the top of the funnel for idea generation. That's a really important piece of my investment framework, is to, start with companies that have been vetted by great investors, right? It's bowling with bumpers. It's what Monish Pabrai talks about, shameless cloning. Okay. So, I'm not ready to go out on my own with the small or micro cap opportunities. That's not to say I won't be within the next couple of years, but I don't feel any pressure, any urgency to get to that place where I'm kind of picking my own small or micro cap opportunities. And there are investors who are able to buy the small and micro caps. There's that fund in UK, Smithson, which is, part of the whole Fund Smith umbrella, where they buy small and micro caps that fit with the whole framework of Fundsmith, right? Great companies at a reasonable price with long runways. So I'm hoping in just a few days, the next month will be released, and we'll be able to see any activity within Smithson for those smaller micro cap additions to the portfolio. Okay, last one, and then I'll jump back over to the community post. Rasmus, what I mean by financial engineering is issuing, spinning out different securities, buybacks, and leverage by using these instruments like the PE firms the return will be higher, but not because of the business performance, but because of financial engineering. Yeah, okay, so that's a little different than financial shenanigans. If a company is going to spin out, or say with the case of Naspers, right? You've got them pushing their assets into Amsterdam through process to unlock value, right? To close the discount between the net asset value and the price currently being served up by Mr. Market. That's more just intelligent value creation or unlocking value for the company. So, there can be a fine line between those things. In terms of buybacks, Terry Smith talks a lot about buybacks, how most buybacks are value destructive to shareholders, okay? Because often how companies approach buybacks is they say, all right, we're going to spend $5 billion on buybacks in the next year, okay? Now, to do that regardless of price doesn't make any sense for shareholder value creation. If the price of a company shoots up and it's way above what the intrinsic value of the business is, and you're buying back shares, you're destroying shareholder value. Okay, you're just kind of throwing money away. So that's not smart buyback. If the price is depressed, like I think it is in the case of Naspers and Prosus, and the company is buying back shares, that makes a lot of sense in terms of returning or creating value for shareholders. So buybacks only make sense if you know what the intrinsic value is. At least you have a range for intrinsic value, and you're buying back below that. Otherwise, it's destroying value. So there's a way to do all of these things well: issuing, spinning out, buybacks, leverage. But you've got to be smart about it. You've got to know what you're doing. And a lot of management teams don't. They don't know how to do those things well. So you've got to watch out for that. Yep. So the next one in the community post from Jeremy. I saw in a recent video of yours that someone asked you about the seemingly natural progression of super investors to go from a Graham Buffett deep value investing, right? So this is early Buffett, to Munger sleep-like long-term compounders. Have you given more thought to this? Yeah. Well, the progression makes a lot of sense to me. Okay. I think it's much easier to identify companies that you can buy for 50 cents that are worth $1, kind of on current valuation metrics, than identifying companies that are going to grow for a decade, 2 decades, 3 decades. It's much more difficult. It's much more nuanced to learn how to identify those great businesses that are going to do well for a long time, right? The 100 baggers, the 1,000 baggers. Because so much of that is estimating the future, right? Projecting into the future. The further we project into the future, right, the more unknown things are. The harder it is, the easier it is to be wrong, okay? The further we go into the future. So if I'm just buying a dollar bill for 50 cents today based on the assets on the books, it's fairly easy to identify that. I don't have to know anything about the future. I have to know that those assets are going to retain some value moving forward. But there's very little that I have to know about the future in order to find those 50-cent dollar bills. So the progression makes sense. It's really a progression of wisdom, right? Like how Charlie Munger reads for hours and hours every day, and how that compounds over decades. That's really what it takes. It takes a compounding of knowledge and wisdom in order to be able to identify these long-term compounders. It takes a lot of work. It's hard. It takes patience. And so I think that's why that natural progression happens, and that's why we see it in some of these great investors. Let's see, what's next? Rodrigo, what do you think it will be the revenue growth of Alibaba in the next 5 or 10 years? That's a hard question. Revenue growth of Alibaba in the next 5 or 10 years. I think it continues not so different from how it's been in the last 5 or 10 years, just because we have the massive tailwinds of more and more consumers in China. But that's not really what I based my Alibaba investment on, okay? I based it on what is the downside, what is the potential downside for Alibaba, and how does that compare to where I can buy it now? And that was a compelling picture, okay? It's really a heads I win, tails I don't lose much situation with Alibaba from my perspective. So, revenue growth, to me, that's really just upside optionality, okay? I'm comfortable that my capital is protected at Alibaba. Obviously, the recent price of it hasn't reflected that. But I don't invest based on what the market prices do. Okay, that's not investing, that's speculating. So, whatever price shakes out in the short term is of no consequence to me. Let's see. Let's jump back to the live. See what's happening here. Nathan, you are super bullish on Micron. Are you going to add more? I have not added more Micron. Micron is the largest position in my portfolio right now. And, when that's the case, I don't feel pressured to add more, even if, I'm still very bullish on the company. If I still think the price is attractive today compared to what I think the company is going to be worth a few years from now. Because I think the issue you run into, if you have say the largest position in your portfolio and you start adding to it, you get to a situation like what Nick Sleep had with Amazon, where it's 70% of his family's wealth is in Amazon. And then, obviously that was too much for him. So he cut his Amazon position in half, later added Asus. So I could see Micron getting to that position in my portfolio in the next couple of years. And so I think adding more right now might just bring me to that situation faster, where I have to make a decision. Okay, this is a very, it's an outsized position in my portfolio to the extent that I'm not quite comfortable with, at least given my outlook on Micron. And so I'm not eager to get to that place where I have to make that kind of a decision to sell, because maybe it's just too big. So I'm going to hold tight with Micron at the moment. Abel, have you ever taken any interest in ASML? No, I don't know what ASML is. If so, would you consider putting it on your watch list? Let me just see what ASML is. There's a few different ASMLs. I'm going to assume it's the one on NASDAQ here. So it's a semiconductor company. Yeah, I haven't looked at ASML. Looks like it's out of the Netherlands. Let me know. Let me know, Abel, why you like ASML, or why I should look under the hood on that one. Otavio, how do you handle with currencies of some developing countries when investing outside of the US? You could have a big volatility of USD from time to time and would not consider the business itself. Yeah, volatility isn't really something that bothers me, okay? I look at volatility and I see opportunity, because big fluctuations in price, right, which is what volatility is, gives me opportunities to buy when the price tanks, when it's far below my estimate of intrinsic value, and it gives me opportunities to sell when the price is sky high, when it's far above my sense of intrinsic value. So where people get into trouble with volatility is that when they don't understand what they're investing in. and they look to the market to tell them what to do, right? They look to the market to be fearful when the price is plummeting. That's not how I roll with market prices and volatility. So, currency volatility, business volatility through the market, it doesn't bother me. So that's not something I pay much attention to unless it gives me a compelling opportunity to buy. Just want to shout out to the super chat guys. I'm going through these chats one at a time. If you want your chat to go to the top and for me to tackle it right away, or just as a completely new way to give back to the channel here, hit up the super chats. I've never gotten a super chat before, so you would be my first, and you never forget your first, as they say. So keep that in mind. Otavio, one more. Do you consider a bigger safety margin in cases such as racists in Turkey regarding the currency? Well, the margin of safety there, at least as Monish Pabrai values racists, is, so big that it really helps with things like currency volatility, just being comfortable with that. Because when you have a company where the market cap is 140 some odd million, and the assets are worth 800 million or 900 million, and those are premier assets, right? These warehouses, some of the tenants they have, the quality of the tenants from all over the world. It's, it does make me more comfortable with the current currency situation over in Turkey. So, and it reminds me of Li Lu. Back when Li Lu was in college, he found this opportunity, I think it was in Russia, where he was buying $1 for like maybe a cent. Okay, it was like a 99% margin of safety. A lot can go wrong when you're buying $1 for 1 cent, and you still make money. So that's a great position to be in. Oh yeah, we're getting some lively chats. Love it, guys. Keep it going. Mo, Baba and Tencent are going through their salad oil crisis moment. Could be. A shout out to American Express when Buffett bought, I think it was in the 50s when the salad oil scandal hit. Here in Beijing, there still aren't any real competitors for payments and e-commerce, right? So you've got virtual monopolies with Alibaba and Tencent. And it could just be a fantastic time, guys, to get in to Baba and Tencent. This is not investing advice, obviously. As investors in the US, obviously there's a lot to get comfortable with investing in a country like China that has such a dramatically different political system than what we have here in the US. So, make sure you're comfortable, at least comfortable enough to take a position in China. Don't let anyone pressure you into saying, hey, China's cheap right now. This is a once in a lifetime opportunity. Don't miss it. Because at the end of the day, it's your own comfort with the investment that's going to determine how long you're able to hold on, what you're going to do if the price goes down another 20, 30, 50%. At the end of the day, it's knowing how you're going to respond to whatever the market throws at you. That's the only thing that matters. So keep that in mind with China and really any emerging market. Let's see. Ann Schumann, love you, Brad. Thanks, buddy. Love you too. I'm also going to start a YouTube channel so I can talk to you. Yes. Love it. So one of the things that I really pushed early on in my YouTube journey was sharing, right, how things were going. Because I want to help you guys start YouTube channels. I want to help you. I think YouTube, so I really drank the Kool-Aid from Naval Ravikant on this, where, there's 3 leverages in the world, okay? There's people leverage, which is having people work for you, Okay, so that's a way to leverage what you do. There's people leverage, there's capital leverage, there's other people being willing to give you money to do more of what you want to do. Okay, those are permissioned leverage. You need other people to be willing to work for you. You need other people to be willing to give you money. Okay, you need other people's permission to do those things. All right, so there's that hurdle of needing to get permission. The third major form of leverage in our current society is code leverage. Okay, and this is, all of these servers, right, that Google has, Amazon has, are working for you for free, right? They're just churning away 24/7. And if you're willing to write code, if you're willing to create content through platforms like YouTube, Twitter, Instagram, all of the social platforms, that's permissionless leverage. Okay, and it's really the currency of the new rich, right? As the term that Tim Ferriss would use in the 4-Hour Work Week. It's a fantastic form of leverage, but it's slow. Okay, I've been making videos for a couple of years, really since the start of the pandemic. So like a year and a half, I've really been hitting the content hard. And it has been a very slow journey in terms of growth, in terms of getting attention from people through YouTube. So if you're willing to put in the time, if you're willing to put in the effort, if you're willing to take the risk, the accountability risk of putting yourself out there, being willing to look stupid, being willing to be wrong, there are vast rewards for that if you could stay the course and put your ego aside. So I love helping people who are starting YouTube channels. If any of you are starting YouTube channels, hit me up on Twitter, DMs, and ask me, what are the couple things I need to focus on to really get a YouTube channel off the ground? And I will tell you everything I know, everything I've learned from this journey. The biggest thing is forget about editing. Okay, editing takes a lot of time. So figure out what you're happy to talk about for a year or a couple of years, what topics really light you up. Hit record, talk about it, upload it every day, and just keep going. Okay, you're going to learn along the way what people are interested in, what people want to see. Just start today, no editing, make it as easy as possible to produce content every day. And also, don't think about it as creating content. Okay, it's not this magical thing you need to come up with and create like this Picasso. You're just documenting what you're interested in. Okay, your journey. That's it. You're documenting your journey. A lot less pressure that way. Let's see. Scott, nice to see you. Nice to see you, Scott. Rasmus, which company in your portfolio do you think will perform the best and the worst at current prices? At current prices, I think Baba is going to perform the best just because it's been beaten down, right? And so it has a lot of potential upside. Perform the worst, hopefully none of them, but obviously it's all relative. I would say Seritage is probably going to languish. I mean, it's all about time scale, right? So when you say which will perform the best and worst, you need to know the time scale over which we're measuring that. Over the short term, over the next couple of years, I would say Seritage could easily languish for another couple of years. I like it over, say, 5 to 10 years. So that's what we'll go with. Mirko, do you agree with Monish and Frank that Tencent is probably a better investment? Monish even said there are too many ways for them to win, so many paths to victory. There are so many upside options with Tencent. I didn't hear Monish say that Tencent is probably a better investment. I didn't hear him say that. So if you could link to where he said that, that would be awesome. A better investment than what? So Tencent, are you comparing it to Naspers and Prosus, or are you comparing it to Alibaba? Curious about that. Nick London, hello. Is it worth turning to cash short term given high valuations. See, that's a market timing thing. I am terrible at market timing. I've tried it a few times in the past and I've gotten burned. So I'm not turning to cash. I'm, virtually fully invested, probably like 90% invested. And I think it's probably going to burn you to go to cash, thinking you know what's right around the corner in the market. So I wouldn't do that personally. Index investor. Okay, so this is from the perspective of an index investor. No, I mean, as an index investor, hopefully you have cash consistently coming in, right? You have a job where you're setting apart some of your income each month to go into your investment portfolio. I would just dollar cost average into the index. The only way I might tweak it is if you're an index investor and like there's blood running in the streets. Okay, if there's panic everywhere and it's clear that the market is depressed, that might be an opportunity to say, instead of 10% of your income, try to squeeze a little bit more. Say put 20% of your income into your index portfolio. That's the only way I would tweak it. Last couple, guys, we're over an hour here. So again, if you have any quick questions you want to make sure I address, hit that super chat so they go right to the top. I'm going to take a few more out of the live chat thread here. John, not sure if it's too personal to ask, but what kind of compounded annual returns are you achieving since your adoption of following super investors? I've really only been following super investors for 2 or 3 years, and I haven't done the work of figuring out exactly what my returns have been in my portfolio. What I want to avoid is paying attention too early to what my returns are, because in the short term, there's a lot of noise, right? It's all noise in the short term in terms of where price can be relative to value on a daily, weekly, monthly basis. So I want to make sure I have enough time that my return numbers are meaningful, like they're actually pointing to skill rather than pointing to noise. So I'm not in any hurry to calculate what my personal returns are. That's not to say you guys shouldn't track them more frequently. That's more something that I'm comfortable with. And just so you guys know as well, I am not your guru, okay? Do not follow my recommendation. Do not follow what I'm doing because you think I'm a superior investor, okay? This channel is really just documenting my journey to hopefully be able to pick up some principles for outperforming the market over time. Okay, if I can't outperform the market over time, I should join the market, right? I should just index. My hope is that I can do better than the market. That's what this whole journey is about. But like I said, I'm not eager to calculate what my returns are until I have a big enough chunk of time that those calculations are meaningful. And I think what that is for me, it's probably about 5 years. So probably give the portfolio another couple of years just to pan out. Mirko, ASML is basically selling shovels in a gold rush. Ooh, so a pick and shovels business. They have a monopoly in the supply of EUV lithography machines needed for high-end semiconductor production. That's compelling. Yeah, okay. So I'll take a look at ASML. That's similar to my thesis for Micron, is a pick and shovels in all of these emerging industries, right? You've got electric vehicles, you've got artificial intelligence, you've got all of these industries that are going to need more and more data processing in order to get better and better. So that's a fantastic kind of business when you're selling the raw materials for that kind of for those tailwinds, right, that we're seeing now. in those different sectors. John, by the way, I love your YouTubes and the way you analyze. Keep up the good work. Thank you, John. Chris, checking in while students are at lunch. Can't stay long, but thanks for doing these, Brad. Can't wait to watch the published version later. Awesome, Chris. Thanks for being here. And Schumann, Brad, I started looking into Cliff Sosin from your list of super investors. Yeah, it looks like Cliff Sosin, like 37% annual returns. I think that's after fees. Over the last something like 8 or 9 years. So definitely Cliff Sosin has caught my eye, and I will be watching his 13 Fs to see, if he's taking any new positions. Right, 40% for a decade. Yeah, definitely 40% or more before fees. Jack, hooray for live, Bread. Yes, Jack, thanks for the shout out there, buddy. So I think we'll do one more. Let's see. Yeah, let's do this. Nathan, how many positions in your portfolio currently? So I've got, in terms of high conviction positions, I've got Micron, I've got Seritage, I've got Alibaba, and I've got Prosus, okay, which is basically Tencent, and a little extra in e-commerce there in Amsterdam. So it's pretty concentrated, even a little bit more concentrated than I'd like it to be, but I haven't had a big home run opportunity come at me recently. So, it'll become a little less concentrated over time, but I'm pretty comfortable with 4 bigger positions in the portfolio. So in no rush to change that. All right, guys, we got 40 watching live. This is awesome. I'm grateful to everyone who's here. Thank you for the lively chat. And I will not be on Punch Card this week, sadly. I will still be here in Florida. And Florida time, that'd be like 10:30. So with 2 small kids, it's just a little too late for me. But happy to see you guys next week, this time, Wednesday, every Wednesday at 9 a.m. Pacific time. I'm going to be doing these live streams. That's when a lot of you are on. So definitely want to make sure I'm doing this when many of you are able to join in the live stream. And yeah, we're going to keep it going. Love this. Thanks, guys, for all of your questions. And I will see you all in the next one. Take care.